Toronto prices are going to see another 10% increase in 2022. What? Stay tuned to find out exactly what I mean. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you joined me here today. The first headline we're going to talk about right here is from stories.com, and it talks about how a RE/MAX article is saying that we could see another 10% price increase in 2022. This may sound absolutely crazy because we already saw kind of like a 7.5% increase in the first month in January. So if we were to take RE/MAX's report for verbatim, we're seeing 70% increase, which while seems like it's crazy, last year we saw 24%. But the reason why I actually think this is probably true is I already looked at the data for kind of like mid-February for kind of how crazy things have been. And I'm pretty sure we're already at 1.33 or 1.35 mil on average price right now. So that means we already saw like another 6% jump for the first 2 weeks of February. So when the numbers come out for February in March in like 2 weeks or so, I think we're probably going to see a really huge increase. So it'll make the 10% that they're predicting right now. And they made the prediction on the 17th year, which was a few days ago. Then that means they're probably going to be right. So is that saying that we're going to see maybe like 3 to 5% or maybe around that range on the back end of the year? I actually agree with that, right? So while it's a very kind of like eyeball grabbing kind of headline, you have to kind of dissect it a little bit. And yeah, it's probably true because half of it already happened, right? Now, the reason why I don't think this is that crazy of a prediction right now to see another 10%, like is the first reason I told you. And the second one is we are seeing kind of like a market shift, right? And now when I say market shift, everyone always wants to jump at the gun and say, aha, the market's going to crash. It's not. Like what I'm going to say is we're going from say like a 12 out of 10, right? To kind of like a 9 out of 10 now. And this is kind of what I'm seeing right now, right? Like the condos right now aren't really slowing down, especially the one bedroom side. So we're, the stuff under sub $700,000 is like flying like crazy, but the houses are slowing down, specifically in the 905 area. And when I say slowing down, it's like the number of showings went from like 100 showings to like 50 showings on the listings we've got. Then the offers went from like 10 to 20 offers to like 4 to 5, right? And I'm also seeing some houses, get relisted and terminated. And what that kind of combination means is that there's either buyer fatigue, maybe people are kind of just trying to get back to normal life because, the pandemic restrictions are being lifted, right? Or fully lifted very soon. And this kind of sentiment has just been shifted. Like, you know what, if, the market's just crazy, maybe I'll just see what's going to happen, right? Because there's a lot of fatigue and even like some of our buyers because things have been absolutely crazy, right? Because if things do go up like, 7% this month at the end of it, right? That means we're already up like 15% in the first 2 months of January. So which is absolutely bonkers because again, in the last 42 years, average Toronto's like 6%. So we saw 2 times that amount in a year in 2 months. Just crazy, right? So those are kind of the things we're seeing. And on the relisting side, I see this almost all the time. Like I think we've been pulled forward a little bit in terms of kind of where the market trend is. But what happens is the people selling now, they're like, oh, that person got X. I want X plus Y. So if they don't get the number that they want in the kind of offer presentation day, then they just relist at a higher price or they, you know what, maybe the market slowed down. I'm not going to sell, right? So there's no desperate sellers right now. It's just if the sellers could kind of optimize or kind of make some money out of selling right now, they would do it. But right now, I wouldn't say anyone is in dire need of selling. What is happening is that the buyers, the ones who aren't fatigued yet, who are still kind of looking around, they're saying, oh, look, all of a sudden I went from, 2 houses to choose from to like 4 houses, right? So it kind of rediverts kind of some of the attention of each buyer. So that means the showings come down and also the offers on offer night come down as well. Now, one of the things you do have to remember, and we saw this last year too, was like a lot of people probably don't remember it, but when we went from 2020 to 2021, we saw like a market ramp like crazy. We actually saw a month where we saw like 8% increase in price, which is similar to January. I think that's February. And what happened is the spring market got pulled forward. So it was crazy in January, February, and March. And then April actually slowed down significantly. And same with May, June, July, and August. And then we ramped back up in September. And ironically, or coincidentally, whatever you want to call it, the timing of the market kind of went with kind of Delta coming off and Omicron coming on. And that's when the different variants increased the price of real estate. Now that Omicron is falling off, knock on wood, nothing else come back in the future. Are we going to see that change? And I do think that has a little bit to do with it, right? Because people are just kind of sick and tired of a lot of these offer presentations and being completely listed really, really low and just trying to sell high. People just get, exhausted from that for doing 2 months, right? So when you kind of take last year's trend from 2020 to 2021, and apply that to 2022, where we are right now, I can definitely see April, May, June kind of slowing down, right? And when I say slow down, again, we're going from 12 out of 10 to like an 8 out of 10. Maybe if we have more inventory come on, in addition to what I just saw in the last 5 days, plus maybe like 2 interest rate hikes, one in March and one in like April, then yeah, maybe we can go from like an 8 out of 10 to like a 6 out of 10. And I would say like 5 out of 10 is when we can stop seeing like multiple offers on things, and we go back to like a more balanced market, right? That's kind of my thinking right now in terms of the latter half of the year. The question really becomes, are we going to see another crazy latter half of the year in a fall? We'll see. All right, so the next article over here, Canada wants to welcome 1.3 million newcomers over the next 3 years. Can its immigration system keep up? My question is, can housing keep up? Right. So I think we're always going to do like 400,000, give or take, in the next few years, like 401, 407, 408, something like that. Right. But now they're kind of bumping it up to 431,000, which is, by my math, like 3 or 4% increase. So it's not like a huge increase. But if you take a totality of all of it, you're basically adding like 1% of the population into the current population amount right now over the fact of 3 years, which is a lot of people. And we're not building housing fast enough for all these people, right? So this is kind of something that I struggle with to kind of explain to a lot of people. It's not that I want house prices to constantly go up. It's just the immigration component of the government and the housing component of the government, they're just not talking, right? Because immigration is federal and housing is like provincial and municipal. And when they don't talk, the federal government just lets a bunch of people in. The provincial and municipal is like, we have nowhere to house them. And that's why prices go up, right? So when you kind of mix those two things together that aren't supposed to be mixed together, that's how you have a housing crisis. And that's why, everyone's trying to scramble to get more housing in place. Now, last year we did bring in 405,000 newcomers. I think some of them were already here because of, people couldn't go in and out of the country. But for us to increase it to 430,000 in 2022, that's a lot. And I would say a big chunk of it will come to the Southern Ontario. Now the question really becomes, how much of an impact is that going to have on the housing prices? And I'd say we'll probably see a really big ramp up in rental rates first, and then we'll see what happens on the latter half in the year. If this is the type of real estate content you enjoy, help us spread the knowledge by smashing the like button and subscribing to the Prime Property channel, because every week we make awesome content like this so that we can be truthful and transparent to you, so that when you're ready to buy, invest, or sell your property, but you know what? Zhen, him and his team know what they're talking about, and you'll book a call with me using the link right here. It's www.chatwithzen.com. Okay, we got the next one here. Government doesn't want to harm mom and pop real estate investors. Well, this one's interesting because you got the Minister of Housing and Diversity Inclusion talking about how the mom and pop, so the people who own one rental property or two rental property, they don't want to harm them. And we've had talks about this from government officials saying that, they can't sustain a 10 or 20% decrease. And what this basically is saying is that they're trying to fight for a reason, saying that, hey, these people who are buying investment properties are providing housing to people, right? But the counter argument is that because these people are buying these housing, they're adding more demand to it, which for people who are buying their first home, is causing a price drive up into it, right? And I actually think both sides are correct and both points of view have merit. But the problem is everyone's always kind of like looking out for themselves and their best interest, right? So when you have people who are like mom and pop investors who have some money and they're trying to make sure that their lifestyle is good and the value of their money continues, they put into real estate because it's a safer store of value for your money. But then you got the people who are trying to buy a home for the first time and they're competing with these people who have a lot of money, and they're just getting in the way of the first time home buyers buying something so that, the prices go up. And everyone is ultimately trying to find someone to blame, right? And there's no right or wrong in this. It's just that the incentive structure is totally messed up for everyone's side. It's like if, real estate wasn't such a safe haven for money, or there's other better investments out there, if the interest rates are to go higher, then maybe there'll be less mom and pop investors. But I do also agree that you do need a level of investors to kind of continue creating more supply in the market. And I'll give you a really good example of this, right? And I say this without any bias in any shape or form, but people just don't understand it. For pre-construction projects that come out, the builders who are selling them in pre-construction phase, they need about 70% of it sold before they can go to a bank to get construction financing. Now, some builders don't need the construction financing because they have a really good balance sheet, right? But those who do need to get construction financing need to sell a certain amount. And the difficulty in selling pre-construction is you never really sell it to a lot of end users because you never know the timeline, especially for condo in like 4 to 5 years, right? Like your life could change in 4 to 5 years. You could be married, you could have kids. So the end users don't really make sense to buy a pre-construction product, maybe a house, but most of the time the condos don't. So that means that you need the investors to buy these pre-construction condos so that the builders can go to the banks and get financing to build these structures and create the few hundred units for supply. Because without the investors to buy those projects, there's going to be no way the builders can finance it and build it, which reduces the supply. So there's merit on that side, right? So it's kind of like a balance between the two. If there is kind of one way to kind of fix this, I would say it's, again, fix the money problem and just increase supply, right? This way, not everyone is going to be kind of fighting for the same type of product, right? Because they're, in one ecosystem where one needs another. It's a more symbiotic than kind of parasitic. And a lot of people just can't see that because housing is such a sensitive topic, right? So yeah, when you go down this article here, so you can see down here that they're talking about, banning foreign buyers again, preventing anti-flipping tax. These are all things that are, again, great in concept in terms of talking, but they're not going to affect the kind of bottom line for where housing prices are going to be. It's still a housing crisis at the end of the day, even if we put those things in place. All right. So then the next thing here, we got the annual inflation tops 5% for the first time in 30 years. Wonderful. We're at 5%, right? It's being driven higher by housing, gasoline, and groceries. If anyone, again, I'm not going to harp on this, but if you actually look at how CPI is calculated, they don't actually use housing. It's owner's replacement rent, which is kind of baloney. Gas is definitely up. Groceries is definitely up. So I think it's higher than 5%. I'm not going to go down to it, but we need interest rates to go up because right now when inflation is at 5%, mortgage rates are at 1.3. Real estate market is still continue going up along with assets because the negative real interest rate is below zero. Then we got our next article here, which says, Tiff Macklem says inflation is mostly about supply, suggesting more gentle path for rising interest rates. I just found this funny. I just want to tack it on to after the inflation rate because while inflation is going up, now this is, again, suggesting that it's more about supply. This is also the same guy who said inflation is transitory. And I do think, and I said this before, inflation will kind of run off because the year-over-year increases should slow down. But it just sounds like they're making another reason to maybe not increase interest rate. And that's kind of scary because it needs to go up. And the March 2nd date, while a lot of people are kind of eyeing it, and if they don't increase interest rates then, things are going to get really nasty in terms of kind of what asset bubbles are. You saw what happened in February when they did increase interest rate. Now just imagine March because it's the second time, right? And then you got the last one here. I'm just throwing this one in because, again, it ties into the last two articles where it says that Canada lost 200,000 jobs, and the two mandates for the Bank of Canada is to keep inflation down and to keep employment high. And now that we've got inflation high, but we have jobs down, and they were talking about, potentially more gentle path for raising interest rates. I don't know. It just kind of spells to me kind of like they're laying the groundwork for not increasing interest rate to the extent that they're talking about, right? Because everyone's kind of pricing in like 6, 8, 10. I'm still at like less than 3. And, as I see more and more of these headlines, I'm like, yeah, we'll probably be less than 3. Well, hopefully that kind of gives you an idea of what's going on in this week's real estate market. If you're looking for some real estate help, you can book a call with me using the link right here. It's www.chatwithzhen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch the most.